Across the world, we use these terms like emerging markets, developed markets, right? These two markets, separated by various definitions, behave differently. And we have got Divya Krishna as the moderator for the panel, and we have Honorable Mrs. Leela joining us, Mr. Babji, Ms. DG, Sir Malachi, and Mr. Sanjit. Six illustrious experts coming in, bringing different perspectives to the conversation around the emerging markets. I'll introduce our panelist Divya Krishna, and then I will have Divya taking over so that he can uh, introduce all the other panelists. So, supply chain management consulting specialist and founder of an AI advisory firm, Raft, and SME to Turing partner in Tech Saga with over 15 years of experience driving enterprise transformation through AI, digital applications, and analytics across various industry verticals. He's currently advising clients on strategic AI adoption, process optimization, and solution design while mentoring next generation supply chain management technology startups on market expansion and growth acceleration, including through the MISK Foundation in Saudi Arabia. He has previously led PwC's digital supply chain practice in the Middle East, established and scaled Bristlecone's consulting operations in the region, and even headed Fujitsu's SAP Cloud Consulting division, building competency centers and leading strategic initiatives. With that, I give to you, Divya Krishna, the moderator for the day. Over to you, Divya. The whole
Thank you
panel is
so,
yours now.
thank you so much, Hemant. Thank you so much. These were extremely kind words. I don't know if I'll be able to do justice to the rest of the panelists in terms of the kind of attendee, in terms of the kind of glowing tribute that you passed on to me. But and hence what I'll do is let them introduce themselves, right? But I'll do start off with a passing note. But for now, let me just at least let you know who are the people out here. In fact, I'm the very reason that I'm the moderator is because I'm the least of the experienced thought leaders who are actually among the panelists. So we've got Honorable Shri Leela Aheer, Malachi Halliday, Diji Shujahi, and Sanjit Singh and Babji VS. All of these are fairly recognized names in their respective domain, and I'd probably let them speak a lot about the topic at hand, right? But I do want to, bring up one particular thing which is very unique to emerging markets, especially in my domain area, right? As Hemant pointed out, that I've been advising and leading enterprise process consulting and technology engagements across the region, right? And of course, in Europe and in US. The thing that would at least 3 years ago or 2 years ago was the most noticeable was that there was a gap in terms of process maturity when it comes to companies from developed markets and versus companies that were from emerging markets. We can quantify process maturity in different ways, but fundamentally, what it led to was the kind of technology that was getting adopted, right? So process maturity means lesser divisions within the organizations and various other things, and that it's also meant that there were lesser, kinds of technology depth that was getting adopted. Now, what's happening over the course of the last 1.5 years, and more so in the last 6 to 8 months, that spread has been even more richer to experience, is that with the agentic AI stack coming in, the process maturity is not changed. It is all emerging markets are growing, and they have the right to grow in their own way. They don't have to follow the Western world. But what's generally happening is that the agentic AI stack does not is not no longer beholden to the legacy stack of the technology systems that were there, right? They are able to talk to systems in structured and unstructured manner, and hence what's essentially going to happen in the nearest future is that we will see that the gap between technology adoption between companies from emerging markets vis-a-vis companies from developed markets is actually going to be minimizing very soon. And because the higher rate of growth in emerging markets is there, it's evident, it they might even surpass some of the Western markets, and that's fundamentally one way to look at it. And it's a belief system that let the people in the audience, as well as the distinguished panelists, to argue about it. But we will just obviously discuss a few questions at hand. But I'll let the panelists take over from here. Any one of you who may want to pick
Hello,
up?
everyone. Hi. Thank you so much, Divya, for the introductions. My name is Diji Shujahi. I'm based out of Dubai currently. I am the CEO of multiple businesses, mostly in the media space. I've got offices in Philippines, India, Nigeria, Jordan, and a few other countries, but our head office is here in Dubai, and we've got offices in Abu Dhabi and Sharjah as well. We focus mostly on media productions and as well as on our own brands that we're working on. I'm also currently actively involved in a youth campaign across Africa and Southeast Asia. So yes, that's in a nutshell what I am. I'm also an author, and I'm coming up with my second book pretty soon. So that's another thing we can talk about. But emerging markets is where I focus on. Most of our companies are based out of emerging markets, and lovely to be part of this panel. Thank you.
Hi, my name is Babji. Are you able to hear me?
Yes. Yeah, you are audible, sir.
Good. My name is Babji. I am based out of Indian Silicon Valley, Bangalore, and have been in the tech business, both on the corporate side and my own startup co-founding done by VC funding in the US. Then I returned back and I've been gifted an opportunity to build entrepreneurship from whatever I was doing as entrepreneurship. Now the new buzzword is entrepreneurship. A lot of corporates are encouraging entrepreneurship within the business unit. So I had the opportunity to build new businesses for a couple of large companies, and they were successful. The last 5 to 6 years, I've been focusing on the cybersecurity domain and the data-centric solutions. And that's where as I'm seeing the new definition of emerging markets are happening. Whatever was emerging markets has probably become developed markets, and whatever was underdeveloped market is now becoming an emerging markets. That's where I'm seeing it. It will be lovely to share my views and also hear from the esteemed panelists. Thanks, Nihul, for being there.
Malachi, do you want to go ahead?
It'll be my pleasure. Thank you, everybody, for having me. I've previously worked at a global long short equities fund, which had $2 billion of AUM, especially focused on emerging markets. I currently run Halliday Forfeiting Services, which is working on funding 2,000 SMEs across the UAE in the next 5 years. I've was somehow knighted for my humanitarian work in Italy a few years ago, which was a great personal honor. And I'm passionate about all things founder, startup, and investment, especially in the UAE, which has been an emerging market, depending on who you ask. So there's a bit of a contentious discussion around that at the moment. But it's a pleasure to be here. I'm privileged to be on this panel with such amazing speakers.
Leela, hi. You please go ahead, ma'am.
Good morning from Canada to everyone. I'm so honored to be on this very esteemed panel. Thank you, Divya ji, for including me in this, and to Rishikesh and to Hemant as well. I'm a former cabinet minister from the province of Alberta. I held multiple portfolios, but there's been today I lead a company called Slam Industries. I'm the CEO of that company, and it's a strategic advisory firm. So I'm basically a matchmaker across the world. But the beautiful part of having been I could say quote unquote diplomat, I don't know how you feel about politicians these days, but you have these incredible opportunities to build very strong relationships and make connections with people. And so it opens some doors that have been extremely positive and very humbling, to be truthful. I've been traveling a lot. I've been to India 8 times in the last 2.5 years. Of course, my family is all there, so that's easy for me. But my dad's from Andhra originally, and my husband is Punjabi, so I have lots of roots in India. But I've also been introduced to the African continent through West Africa and Cote d'Ivoire. And I sit on the cabinet of the Honorary Consul General for Cote d'Ivoire. His name is Kazir Koulibaly. So we've been doing a lot of work through there. We are also, I'm a founder and an architect of a platform here in Alberta called ACABEX, which is the Africa, Canada, Asia business exposition and business exchange. And so I don't know if you're familiar much with the cowboy background of Alberta, Canada. We are oil and gas, agriculture, manufacturing, very, very savvy market, but we also have huge roots in rodeo and cowboys. And so one of our biggest festivals that we have here is called the Stampede. And it's basically a petting zoo for corporations, organizations, startups, and politicians. And so we thought it would be a great opportunity to bring people from these incredible emerging markets. And sometimes I really dislike that terminology because it marginalizes, I think, the incredible work that is going on in these countries. However, it's a wonderful opportunity for those folks to come and visit us and see how we align. I'm very, very interested in trust proposition, in cultural advocacy, in understanding the protocols that are necessary throughout these amazing groups of people to understand how we can align and work together in a world that can be very volatile right now and demanding, considering the geopolitics. So thank you so much for having me, and really excited about this discussion. I'm sure I'm going to learn as much as I talk about today. So thank you.
Now we got a lot to learn from you. Thank you so much. Mr. Sanjit Singh.
Yeah, hi. I'm sorry. I'm actually on my phone. I wasn't able to be at a computer.
Please,
And
please
so,
go ahead.
yeah, and I'm, yeah, so, no, it's a pleasure to be on the panel. I'm based out of India, Noida, actually, which is the outskirts of Delhi. I run a company called iSource, which essentially provides sales intelligence to a lot of technology companies. We work obviously in India, we work in Southeast Asia, and we work in the Middle East, and have done so for many years. So it gives us an interesting perspective of a lot of the emerging markets, or some near developed markets for, the tigers and everybody else. So, and it also gives us a great perspective on, what works in which markets. And each one is unique in its way. What works in India doesn't normally work in the Middle East. Sometimes Southeast Asia has its own idiosyncrasies, if you will. So, wonderful to be on this panel, and I hope I can contribute as much as some of the more illustrious speakers.
Thank you so much, all. Thank you so much. On behalf of the Pitch Matter, I genuinely want to thank you all, and thank you, audience, for sticking with us. And we hope that we'll be able to at least add some value to your time, right? The conversation at hand right now is essentially to discuss what's happening with capital in emerging markets, right? And that's the critical piece of it, right? It's emerging market itself, as Mr. Singh was pointing it out, and someone else has pointed out. We really don't know sometimes if, Malachi pointed out if UAE is an emerging market or is a developed market, right? And that's the key thing, right? And now with the separation of China, for example, right, it is kind of saying, hey, there is US markets and there's the developed Western world markets of Canada, NATO countries, let's just say, and Japan, and some of these other ones. Now China is essentially getting separated out. And then there is large economies like India and Brazil, but then do other emerging markets fall under the same bracket? All of this is, creating levels of difference, right? So fundamentally, we've basically got a few topics, and I'd let all of you to, pick up whatever topic that you feel comfortable speaking about, right? Topics are like smart capital flowing into emerging markets, anything that the market on the emerging markets which is demanding, which is not yet essentially prevalent in the Western world. I mean, a good example of it is these payment gateways like Paytm and other things, right? emerging markets have actually done far better than any of the Western world. I know my time in Germany, how difficult it was without cash, right? And then, of course, whether DIFM or DIY is the same concept, right? Somebody in Canada, Honorable Mr. Aheer, would be very happy to do certain things out in Canada, but people in Noida may actually expect that thing to be done by someone else, right? So all of those things are critical, right? Then regulation is a critical one, right? Too much of regulation can become the reason why things won't take off. No regulation can easily land people into frauds and various other sort of things, right? So how do we find the right balance, and more specifically in terms of when capital flows in, right? And then in terms of if any one of you want to talk about, and then maybe Malachi would be the right person to some of these innovations that are flying under the radar, right? He's been investing into 2,500. That's a big number of MSMEs in the region, right? So I'm sure he'll be able to access some of
On the path, yeah.
the great stuff that's not been captured by many, right? And then whatever technology that essentially is leapfrogging to become the next big opportunity, which is essentially coming from emerging markets that you thought leaders can bring up into the foray. And lastly, which I also actually do not have, I've never believed that price arbitrage being a play in the emerging markets. I mean, nowhere in the world price arbitrage plays. It is always about value creation. China and India have a price advantage because they can produce at scale, not because they can produce cheap, right? So that's a misnomer. But yes, if you've got differing points of view or any other value additions to add to that, feel free to do that. So with that, I'll pretty much open the question floor, and from the audience also, if you feel that these questions are not enough, if you want to drop in a question on the chat, feel free to do that. Anyone from you guys want to pick up any topic, please feel free to pick up, or any other topic that you feel that you need to speak on.
Thank you, Divya. I'm happy to get the ball rolling, as they say. One of the first questions she mentioned for us to discuss is the nature of the flow of smart capital in emerging markets. And I'll draw on our experience from our portfolio at the moment from a micro perspective, and then zoom out to the macro for the audience. In our portfolio, we have 2 car garages, and they serve groups like Gargash, Alphatane, like big groups in the UAE. And there's been recent upheaval in the markets in the UAE, things everyone would have heard about in the news. So that's affected a few industries. It's affected hospitality, of course. It's affected the property market. It's affected the car market significantly. Why is this? People in emerging markets, especially because emerging markets are sensitive to this, people spend less or invest less, specifically, in long-term assets that require significant stability and predictability. What we've seen at a micro level in our portfolio, when you zoom out, you can see the same shocks across the emerging market. Well, so currently, of course, there's uncertainty around oil prices. What's going to be happening in a week, a month, a year from now? Hard to say, which increases the perceived risk premium that investors are placing on emerging market assets overall. As far as where smart money is deploying capital, I'll try not to make this about what I'm doing, but other family offices and others that have an inside run, generally they're sticking with either opportunistic things where they, for whatever reason, they have an inside running. Perhaps they have political connections, market connections, something that will assuage the concerns around security, which they have based on recent events. And in many emerging markets, unfortunately, by definition of being in these markets, there's usually something going on, or there's a feeling of inevitability that will be in the next few years. So every time there's one of these spikes, capital goes to liquid investments, and it goes away from risk-on investments, risk-on, risk-off, as we say, except for like those that are sitting on capital already, that are already entrenched in the market. Those ones take the opportunity to double down. in a very opportunistic way. So that would be hopefully to get the conversation started.
Yeah, no, that's a great one. Can I ask you one question, Malachi, if anyone before wants to speak? But I wanted to ask one question, and more specifically to UAE, right, or GCC in general, right? Our four major growth drivers were hit, right? Oil and gas was hit, trading was hit, basically, right? Tourism was hit, and finance was hit, right? I mean, this is pretty much the doomsday situation for a country like UAE that depends on various things, right? From your point of view, and I'm only looking at positive answers, right? From your point of view, right? What exactly are picking up, or even if it were hit, it wasn't so bad. Because one thing that we all know, oil and gas, it will recover because demand's not really going anywhere down south, right? So whenever these factories can be, these installations can be back up and running their full swing, they'd be back to whatever they were in terms of scale. But everything else is probably going to have a differing point of view or differing dates in terms of when they recoup or recover, right? What are your thoughts on that? And I'm sure you would have sensed something, especially more from the capital's point of view.
Absolutely. Since you directed the question to me, I'll just jump in first. For the UAE specifically, even after a number of people left the UAE following the most recent news, there are still more expats here than there were post-COVID. So the population is still on an upward trajectory. The position or the narrative around the UAE isn't in isolation. It's a destination of relative safety for the globally mobile, those that are pursuing economic opportunity, personal safety. A lot of the people that are here, when everything was going on, and we're going through the process, a lot of my neighbors and others were coming from places where it was like playing in a kid's playground. It was nothing compared to where they were coming from. The sense of security, personal security, capital security, has not been undermined. And I know it may sound trite or cliche to say, but the leadership here has focused very much on both the perceived sense of security, but also actual security across these different dynamics. Over the last few years, this didn't just come out of the blue. The leadership here, obviously, they had a lot of contingencies and plans, and the management was demonstrated to be very, very strong.
Very good, very good. Good to know. Yeah, please go ahead.
I would also love to jump in and say that the industry that I've been in, which is media and specifically creator-led content, has not seen a stop or a stalemate in any kind of growth. We've been growing irrespective of the current situation, the geopolitical situation. It has been something that's growing aggressively in this region and also the emerging markets. But at the same time, I've seen a lot of growth in agri-tech, especially from this region, and the government pushing on to that, as well as health tech.
Oh, wow. Okay, good to know. Ma'am, Ms. Aheer, please go ahead. You have been wanting to make a statement. Go ahead.
Thank you, Divya. I just wanted to go over some sort of some global perspectives, just to bring it, because smart capital is a really interesting way of looking at it. If you're looking at areas like Latin America, they're doing some really interesting things where you've seen pension funds grow, because a lot of capital have issues because of the American dollar, the ups and downs in that. It affects every part of the market. And if you look at the ability to be able to grow domestic money, that you're investing in your own people, to bring up what Malachi was saying, is that, one of the things that blows my mind is that when you go to India or the continent of Africa, you see these, wonderful people who are out in the streets selling their wares right in the middle of the street, right in downtown Delhi. You've got hundreds of people out with baskets on their heads and a child attached to them, and they're selling everything from, plastic bottles to, chips and potato chips and things, and all of them have a QR code where you can, if you happen to be part of that function, that ability to move money in those ways, like Google Pay, which we don't have in Canada, and we're very, very slow to getting this market going. the local people are investing in small businesses all over the place that are running at this level where you can pay to be blessed by an elephant on the middle of the street in India through a QR code. So I'd like to raise this argument a little bit because I think we get a lot of time, we get stuck in the structures of, shifting money and capital markets and all this. Very, very important to all of us that are in these, that are working in these emerging markets. I mean, emerging markets are growing at 4.1%. Right? It's way higher than advanced economies, which are at 1.5%. That's an interesting thing to look at. The sub-Saharan African continent has the largest growing labor base, right? These are all going to impact where smart capital is going. You were talking about oil and gas earlier. Who in this group, maybe there's some of you who had seen this, saw 5-6 years ago the growth in oil and gas because of data centers. The race for data centers, NVIDIA, chips, all of this building, rare earth metals, these are going to turn what we consider emerging markets into the fastest growth opportunities that we can even fathom at this point in time. And the populations are hungry. They're educating their people faster than Western democracies are. When I was just in Cote d'Ivoire, not even 2 weeks ago, I'm meeting with people, I'm 55, and I'm meeting with people who are in their 30s and 40s, they have 2 and 3 degrees in Cote d'Ivoire of different master's degrees. I wonder to myself, what the heck did I do with my life? Feel completely incompetent in front of some of these, brain children, and India is now holding on to its brain trust because so much of that brain trust was outsourced, right? You were talking about arbitrage, right? Like that, or that is going to change very quickly. And the cost of living, I think I can speak for Malachi too, in UK and Canada are massive. They're so high. Our taxes are high. So the payment that we pay for these things is also relevant to how much we pay our people to do their jobs, right? And the taxes and the other things. So I think the variations, I think that partnerships, collaborations, friendships, trust building, all of that is going to add legitimacy. Canada is very well known for ESG. So when it's talking about oil and gas, this is the market that is going to be, I hate to say emerging. Canada is not an emerging market, but my goodness, we've hamstrung ourselves in a lot of different ways to get our molecules out of our country. But I think that trusted capital, looking at ESG credibility, sovereign investors, some of you were talking about that. That's what they're seeking. And Canada is a very trusted partner in all of this. And I'm so excited to see these markets just take over and see what their youth are going to do. I'm very, very excited. DGG, you're working a lot with youth, right? I'm sure you're seeing the hunger in the people that you're working with, especially through social media. The opportunities to grow those markets there are massive. Anyways, I'm sorry, I could talk all day, so I'm just gonna give it over.
No, but at the same time, also what we have to know is all these markets have a huge consumption population. So it's a huge younger demographic, right? So they consume so much of information too, and social media. Yeah.
Well, and that demographic is actually really important to talk about because if you look at smart capital, it's decisively shifting. The younger populations are putting money into these kinds of things. You saw, if you were here for the startup pitches before, Hemant was saying, like, these aren't really startups. These are really well-established organizations and they're hungry. And it's funny because when I go to India, I just find the warmth and the love, and same thing in Africa. Whereas, startups from India are looking for capital in places like the United States and Canada and UK, right? So it's actually really interesting. And I think that we might be looking at the dynamics of these countries in the wrong way because, to your point, these younger populations, they're going to be ruling the world really quickly. And they know how to use this technology as fast as it comes out. Whereas, I struggle at times. So.
I do have a question, right, to both of you, right? And probably from different perspectives. Growing up, we used to think that whenever Adobe would start, the first phase would be when all the names of the people who worked on Adobe application, and you'd read all of those are Indian names and stuff like that, but the company was American, right? Microsoft, we got to know that everything gets developed in India. My partner company in TechSaga, we run GCCs for American organizations, large American organizations like BlackRock and all, and we do a lot of agentic AI consulting for large firms, right? Now, the part of it is that the worker bees come from emerging markets, and that's been pretty much the tradition. There's the smart ones. There are a lot of R&D developments which are also happening in emerging markets. But what is the problem that people who are carrying the capital with them still seek to be in the Western markets where the companies are headquartered, right? Uh, and how can that transition from Western markets to emerging markets? What is the thing that needs to be done to give investors the confidence that, hey, I can actually go and invest in a company based out of UAE or based out of India or based out of Ghana, for all it matters, right? And there, I'm still going to make money, and I'm still going to go and have my 10x or 15x return. How does that play happen? I mean, we surely we're not talking about, say, the Silicon Valley density of startups, but definitely one 1/50th of that size would also be a good number, right?
So let me take that question.
Please go ahead, sir.
A couple of things I wanted to put a kind of reverse. Emerging markets is very loaded term call. If you think emerging markets are the markets that are one of the biggest markets for anything newly happening, that's all happening in India. The emerging markets, the biggest emerging markets are happening here, consumption-wise. I heard somebody was stating, why do people go to West? I think the shift is already happening. The shift is already happening because people think to West that they consume the maximum number of things, whatever they produce, generate, whether it's the product or services. But I think that shift is happening. If you look at in the last 5 to 10 years kind of thing, I heard, I think Leela was mentioning about data centers, mind-boggling investments that are happening in data centers right here in India. There is a political statement or unpolitical statement that people are shifting data centers from other countries to India. And the size of the data centers that are being built here are mind-boggling. Gigawatt kind of thing. So the platonic shift is already happening. In my view, emerging markets is where we are today. It is India. Take the example of how IT changed. Typical low-income group children becoming middle-income families, then they become upper-income in families. Unheard of real estate boom happened only because of IT. Because affordability of decent salary, and then whatever you call it as Maslow's hierarchy, physiological needs, and those kind of needs. House has to be there. I need to own a property. I need to own some kind of thing. All these things are happening. The biggest emerging markets is India. So whether it was shifting of IT or whether it is now, surprisingly, if you have seen, all the manufacturing is shifting. When we moved away from manufacturing and started doing something else, it's a reversing of happening. Largest manufacturing units. Take the case of mobile phones that we are investing. I may not talking about startups. I'm talking about the size of emerging markets that are people are talking about. Whether it is a huge data center, whether it is a mobile app generation. For example, today the number of entrepreneurs, young entrepreneurs have come is in the space of where this technology is coming. One of the, I'm associated with one of the fund, which is about $50 million fund, not a very big fund, but a decent sized fund. We have been making about 26 investments in the last 5 to 10 years, and there have been about 4 to 5 exits and 4 to 5 not functioning. Net about 10, 15 are there. One of the things that we are seeing is that unheard of solutions. Take the case of your drone technology, which was people thought that it is only for weddings. People see in India, you will see drones being used in weddings to do the photography. Well, that was what people thought. But look at the way how drones are happening. People are finding wars without people because the drones are doing that work. The number of startups in Bangalore or maybe in India working on the way the drones can be applied is unimaginable. Whether it is medical emergencies, whether it is dispatching of critical items, whether it is dispatching of medical care, it's going. hugely impacted. So technology which was fashion suddenly is becoming all pervasive.
No,
So
great.
this is from the consumption point. So in my view, emerging markets are right in front of us. 1.4 billion people with 1 billion problems that we have here. There is an abundant amount of opportunity for entrepreneurs to pick it up and go. Yesterday we were on a call on the same platform. One is Jay Chaudhary garu, who is promoting a concept called unicorn. It's called junior unicorns, where entrepreneurs are being nurtured and spotted at the high school level. At the high school level, and some of these guys, bright students with a rural background, with a hunger for trying to create solutions for the day-to-day problems they see around their parents or their villages and all, are huge. This January, we had a big event in Dubai about unicorn, and people were all amazed at the kind of entrepreneurship that is going on. I mean,
yeah. So I'll sorry to interrupt, sir. Sorry to interrupt, right? I also wanted to bring Sanjit, right? He represents something that is also close to me, right? Supply chain. He's basically runs a sourcing company, right? And an entrepreneur for a solution which deserves investment, right? So Sanjit, why don't you? I mean, you can use any of the points, or maybe just answer my question in terms of what will it take for you to get the similar kind of investment as, say, an Oro Labs is getting investment in US, right?
So yeah, thank you. I mean, no, my take is a little different. I would say,
Please go
as
ahead, sir.
you know, yeah. So the first thing is, I think, I mean, this is my personal view that there's way too much focus on startups and not on the keep goings, right? People who've proven, have run a business for 15 or 20 years, which are proven SMEs, that's not sexy anymore, right? It's everything about the new, the next big thing, and something which might or might not work is far more exciting. And personally, as somebody who's run an SME now for 25 years, it is difficult to get capital, whether you want it from the private sector, especially if you're a services business, right? Everybody wants to see scale in India because, regardless of all the innovation and all the startups, pretty much the whole economy works on consumption. That's my opinion. And all the startups that have made money or have listed are consumption based. There is no significant or massive new, technology product that's come out of India or some huge technology stack. Not yet. There are lots of me too's and I'd say flavors of stuff that's done really well in the West, but there is no dramatic technology shift, dramatic technology product, or anything that's come out of India. I mean, Paytm people talk about, yeah, but it's not like as if it's something that's hugely pioneering. Yes, it's worked because of the scale. It's a consumption economy, right? And you had demonetization, and then
COVID help.
everybody was left with no other option, right?
True.
And until it's free, it'll work. Tomorrow, there's been so much talk of there being a charge on it, and then we'll see what happens, right? So, as I said, till as long as it's free, it's fantastic. But once the government starts charging money for it to keep, all the servers going, then we'll see what happens. So, I mean, that is it. I don't want to rain on anybody's parade, but that's it. So, it's largely, and as an SME, even today, you go to most people for funding. If you're not a startup and you're not showing giant scale, right, it's very difficult to access capital. If you go to a bank, they want to know, what is your investment in capital goods, which is ridiculous because as a services company, there's basically computers, right? What else is there, right? And I'm not buying any big machinery or anything. There are government schemes which, I mean, there's this Small Industries Bank of India, which is run by the government. They have some schemes, but it's again done through banks, and again you end up in the same situation where you have to, show collateral to get that loan. While technically the idea is that it's an SME loan and there shouldn't be collateral. So there are lots of challenges between looking for capital and getting it. So I would say, I mean, and what Malachi is doing sounds very noble. That there's 2,500 startups or SMEs that he wants to fund. That's fantastic. But so I would, and everybody talked about smart capital. Capital looks after itself. It's going to go where it gets the most return, regardless of whether it's an emerging market or whether it's fully developed market. It's where they see the most returns for least risk. I mean, I was a financial journalist for many years before I started this organization, and I've seen that there is, it's where there is risk, there is reward, but there are very few people who will take that punt. In India, also, if you look at all the companies, all the startups that have been funded, those are all of them are Me Too's and are basically consumption and scale plays, right? There is not one thing that a Zomato has built which is different from what's already happened in the US, right? Or a Swiggy, or a Paytm, or Oyo Rooms, or whatever else. I mean, Byju's is done anyway. A Flipkart. What's new? What's hugely innovative about what they've done? Yes,
Yeah.
So that's my opinion, but that's
No, you certainly hit a lot
yeah,
of chords. I mean, there were a lot of faces that were nodding up and down, right, when you were making all those.
yeah,
And personally, I agree with you. Nobody is talking about companies that have been existing for the 5 to 7 to 10 years, and they've been
yeah.
doing some very good job. But but they're somewhere in the middle. They've still not scaled up, but they've
Yeah,
got great
yeah, sure.
impressions and
No, and
credibility in the market.
even if you look at companies that have raised a lot of, I mean, Ola is a classic example, right? It's a copy, and then you're trying to now, you started as a cab company, and now you're trying to sell, 2-bit scooters. So, I mean, come on, yeah, for God's sake, right? And then you want to get into home batteries and something else. Okay, if there's money, then that's stupid money, if you ask me. That's whoever's funding that show is obviously doesn't know what's going on.
Yeah,
Anyway, yeah,
I have an experience of my own to bring out, right?
sure,
And this is more to do with the fact that, capital is available in a faster way because of fintech, but it's not available to people who matter. Some couple of years ago, a few engineers who had developed an amazing chemical agent that cleans up industrial pipelines, got a conditional purchase order from ADNOC, and they were looking for funding to go and create a base. I
right,
mean, this is a classic case of PO-based supply chain finance, right? And while even with all that fintech and the capabilities that exists in UAE, the only thing that are available to say 5% of the businesses is invoice-based supply chain finance or funding, right? Or we call it as invoice discounting.
right,
But so the technology exists, people are there with credibility, and the order exists, but they still couldn't manage to put together the funding required because nobody was there to back them. And more specifically, banks which could have backed them, because ADNOC is no small joke. If it's given out a conditional purchase order, that means it will honor it, right?
right,
So, and this was definitely an IP product, right? So, I mean, this is essentially what we're saying is, this. It's, you could say it would be TikTok of the technology, no, TikTok of the chemical world, right?
right,
Something new that would have come up, but that couldn't come up because of the way that some things not yet geared up in these emerging markets. That, ma'am, please go ahead. I just wanted to make that point, but please go ahead if you want to add to it, or maybe you want to make another point altogether.
No, thank you, Divya. Actually, I just wanted to make a couple quick points. And I'm sure Malachi has a lot to say about this as well too, but from Western markets, if you are we're looking at dollar denominations, right? So when you're investing in emerging markets, you're hugely exposed. So if there's an exchange rate volatility, that is a major, I would say probably what I hear the most from people who are wanting to. And we've got some solutions to deal with this, and I'll run through that quickly too. I think that, for example, also that you were mentioning about the lack of market development. This is another piece of it. You have to look at the market. If you have a bunch of Me Too's, it's because the market research hasn't been done. And so, say, for example, if you haven't got tools or timelines or trust mechanisms, it's fundamentally different. There's a cultural necessity to understand the culture that you're dealing with and how to do that. And then I would also suggest that it is impossible. There's an education piece. I met with a professor from the University of Victoria, which is on the west coast of Canada, yesterday, and he's been taking students for 10 years from Canada to India to sit with these large corporations, Tata, Reliance, all of them, to sit and find out about these markets. And there is a lack of education, of understanding what is actually happening in the emerging markets. But you tell me, I'm sure there's people on this panel smarter than I am, lots smarter. Why is it so difficult to break through? The problem is you literally cannot buy in. You literally can't. Like, there is US investors that have domestic exchanges, like the households in the United States hold over 61 trillion in equities. And almost all of it is concentrated in US markets. But the vast majority of world's investors have absolutely no way to buy in directly. So if there's that wall keeping that capital out, I think that we have to look at our own internal politics and things like that to see, how we could do that. So I don't know. I just think that, we can look at, I don't know, blended finance tools. There's a lot of banks that are looking at that. We can look at currency hedging infrastructure. That would be a great opportunity. You see a lot of these large scale organizations that are actually doing that. And it's part of ensuring that you're going to get the ROI, right, from your investment. And I think also too is that you have to be building bankable pipelines. That's been a really major conversation that we've been having with our trilateral partnerships for the events that we're building. So I just thought I'd mention that, because I think, to your question, we need to kind of bring it back to why people with money aren't investing into these incredible markets. And I would suggest that those are very realistic reasons why.
And I'd like to add one flavor: services. DG, you run a services company, right? It's far more complicated. Even if you have got a great company at your end, it's far more complicated for you to get a investment, if you need, that is, than say somebody who's just 6 months ago did nothing but built a product and got put together in front of the investors, right? We saw so many of those investment pitches, very few of them were services. What essentially,
True.
I mean, investment market services do get invested, right?
I don't know, because see, in this part of the world, I haven't had that experience. Being in the services industry for the longest time, we've always been supported. Every time we've gone to raise funds, we've always been, we've been very successful in that. So the whole shift of the product base is just happening now, I would say that. But then again, it's very region and culture specific as well. So in this part of the world, and even the emerging markets, the services, like most of the fintech services or whatever, these are all, at the end of the day, they are services. You can say that they are products, but then in one way or the other, at the end of the day, they are services. So depending upon the market, depending upon the cultural flair, I think the investments matter accordingly. And I think we should also look at, I know that we started this whole thing by talking about how the large corporations or the large funds from US and organizations like that, why are they not funding from the emerging markets? We can also look from the other way, where UAE, GCC in particular, GCC has been, as GCC, investing a lot of money in other countries, like $2 to $3 trillion have been invested in the so-called Western countries. And most of us here, I don't know how the others' experience are, we've been getting our funding from here, from the organizations that we know. And it's been so it just depends upon how your product / service looks and how you actually fit it with the market and make it more culturally relevant. That's what I've seen, and I'm sure Malachi can talk a bit more on that from this part of the world.
Malachi, go ahead. And for everyone, I think we're almost also close to the end of time. So whenever you're speaking, please speak, and also please pass on your ending notes as well. Everyone, Malachi, please starting.
Thank you. I'll go first, and I'll also have this as my finishing note. I hear what DG's saying, but building what the Honourable Leela said about tools, time, and trust mechanisms. The capital markets in developed markets are much deeper as a virtuous cycle of the compulsory retirement funds that take in the capital from the vast population, so most people that are saving. And then when they're deploying into their local markets, there's a lot of regulation and laws that are put in place around transparency, around auditability, that then protect investors at every level, whether it be fixed income, VC, etc. When there's more regulation, foreign capital, like what Ms. Diji was saying about like the GCC investing overseas, of course they're going to invest in markets like America because America's had this incredibly large retirement funds investing locally, infrastructure, compliance, and everything is built there. So it's attractive for foreign capital. So it's this cycle that feeds itself again and again. And that's why over 60% of the global stock markets are reflected in US stock markets. And it's also why they have so much capital. Places like Luxembourg, which is a bottleneck for European capital, even Australia, which is a very small country by population, because it has such an aggressive compulsory savings scheme, has, I think, the third largest, or at least it did 10 years ago, third largest pension funds. So things like this significantly contribute to capital availability. So then the nature of capital and how it is managed is different. So in emerging markets, you then have, again, more of the family offices or royal families or the big power players in these markets, again, being more opportunistic, using their networks and connections, their economies of scale. And then that, again, feeds itself in these emerging markets as a, I don't want to say unvirtuous cycle, but it's a little self-defeating because it's anti-competitive, where the same practices might be forbidden in more developed markets because of anti-competition laws to protect investors in pension funds. In these other markets, it's less present. That's before you begin to address things like tax that's just more recently been brought in here, which was fantastic for the UAE because it improved the overall data compliance, which made companies fundamentally more fundable. With all that being said, it's been an absolute privilege to share this panel with so many incredible speakers. I'd love to listen for hours to each of you. For anyone that does have a business in the UAE, I'm working on funding 2,000 of them. So if there's anything I can do to support or advise on investment or startups and whatnot, it's a privilege to serve. Thank you and have a great day.
Thank you. Anyone who wants to go next with their passing notes?
I just want to add a couple of points. I picked up from Sanjit and Diji, that Sanjit was mentioning that it is becoming increasingly difficult to get the funding for services-based companies. It is true. But there are trends that we are seeing now where if you are smart, you can actually package the service in a productized manner. Like Diji was mentioning, the fintechs companies that are mushrooming all across India. How? Why are they getting funding? It looks like they are asking funding for a product innovation, but actually it's being put to get into the payment gateway solutions and services. So if anybody who is able to bring these services around the product or productizing the services in a packaging manner, they are highly successful, and the future is going to be there. It applies to not just startups, it applies to large companies. I worked in Wipro. It is a $10 billion company, but companies that are younger to it have taken over this company in $10 billion revenue long back. They were struggling at one point of time. What to do. So many CEOs got changed. You know what has happened finally now? They have realized that you can work for Microsoft to help Microsoft to develop a product, but you are not developing the product. This stigma was hitting these IT companies for quite some time. Now, if you look at it, any of them, they are always making a product into their solutions and services and packaging it and saying it, look, for example, Wipro will call it as Wipro Intelligence. The company which I am working, Ahana, we also have built an IP. We are a services company, but we are nicely packaging it using our own tool, calling this as an accelerator for a certain data-driven solution. And we are calling that as our data management solution, but it is finally leaving services around building around. I think this model, though it is late, in my view, people have picked up in India. It's a one way of maturing, whatever you call it as a transformation, where it looks like a service, but it's actually a product that is helping you to do it, or if the product which is driving you the service. That shift is already happening. You can see it here, the benefits. I mean, I heard Leela was saying that digital payment systems that are so prevalent. You can go onto the street and buy one coconut, fresh coconut water for paying 25 rupees using your QR code. Unimaginable. Corona may be reason for that, but look what it has left as an indelible mark to the entire economy. People who were not having all these people, street vendors, they were not having bank account. Now they were made to open a bank account. That's because their money is coming. So in my view, there is a transformation taking place in India. It is no longer services and begging country. It's also driven by innovation. It takes some more time because we were reeling under certain type of psychological and oppression kind of a mentality we were coming with. Now only people are able to. Today, if some student comes out of the college and say, I am becoming an entrepreneur, people don't laugh at him. They said, it's a good idea. Good that you're thinking. You 10 years back, 5 years back, or 15 years back, if you say, I want to start a company, people will laugh at you. They will pull you down and say, boss, why don't you go and get one government job? Yeah? Why are you doing this? So it is, the stigma was there. In my view, it's all happening. It probably sometimes we won't notice it in a subtle manner, but it will happen. We will be India will definitely be the emerging market for many things. EVs, you take, it is becoming, ours is the biggest market. Data center, ours is the biggest market. Mobile, you take, ours is the biggest market. Mobile apps, the number of youngsters who are developing unimaginable kind of an application where app can be developed. It's all happening here. But it takes little more time. It look and feel and size like a mature market because our size is big. Size is big, economy is very big, and it is stable. It's sustained.
Yeah. So thank you so much, sir. So in fact, I could go on hours listening to these valuable things from you, but I also have to be respectful to the I think Hemant and team, they have an itinerary to follow, and we've kind of run over time. Honorable Leela and Diji and Sanjeev, please short passing notes. Really would appreciate and help. Go ahead.
I'll just say quickly, we need to have another panel where we talk just about ICP and apps at some point in time. That just needs to be a whole other discussion. I just wanted to say that 30 years ago, emerging markets were told to wait, and to wait for Western capital approval, to wait for IMF, and to wait for the dollar to cooperate, but they didn't wait. They built pension funds and local currency markets and digital payment rails, like what we were just talking about, and SaaS AI, and we're the first to design mobile first populations and legacy infrastructure. And now the rest of us are actually running really fast to catch up. So that window is not going to be permanently open. And the countries that are partnering to build right now, this is like gold, this architectural global finance that we're moving into right now. And I would love to see us all be able to talk about emerging opportunities versus emerging markets and treat it like we've arrived, right? We've arrived. And the question isn't so much more whether we engage at all anymore. It's whether or not you're going to be at the table while the terms are being set. So thank you so much for having me, for having my perspective. I feel very blessed to be with all of you. Looking forward to continuing our friendships and relationships.
Sharon Aheer.
Thank you so much.
Yeah, thank you. It was wonderful listening to all of you and getting your perspective. I truly appreciate the opportunity, and I hope we can do this again soon.
Yeah, it was wonderful listening to you, Diji.
Thank you all. It was a pleasure. And as the topic largely was all about emerging markets, we have been focusing our companies globally. We've been focusing on emerging markets, and we've seen how much, like most of our businesses, like the large scale of business we bring in from the African and the Southeast Asian market. So I don't even like to call them emerging anymore. I think they are far, far, far ahead of all the other Western markets. But then, these are certain words we have to use. And I'm really glad that I've been part of this great panel, and wonderful meeting all of you. Thank you so much.
It was a pleasure indeed. And thank you, Hemant, Rishikesh, for having us all here. And as Honorable Leela Aheer mentioned, that we should like to request another panel if your timeline suggests. We'd love to re-engage into some of those conversations. Probably love to listen a bit more to Malachi, Babji, Sanjit, Diji, and Leela. So Yeah, over to you guys. Thank you so much.
Thank you. Thank you.
Bye-bye.
Thank you, everybody. And I have an audience question which has come up. So I'm going to ask that question to you all, and you can choose who wants to answer that. The question is very simple. Can you throw some light on the stability aspect in the ongoing geopolitical crisis? What does it mean for a business, for the startups out there, for anybody who's building a business?
I'll nominate the politician in the room or ex-politician in the room.
Well, first of all, my wish to the globe right now is peace. Wars, if you look at what's happening in the United States right now, they can't build hospital infrastructure for their people, but they're spending $6 billion every day pretty much on, keeping the Strait of Hormuz closed or whatever it is that's going on there. And I don't mean to pick on any particular country. We all have our issues. Our new Prime Minister Carney, has been able to build bridges with India again, which we lost because of bad politics. And that was our fault. That was Canada's fault, not India's fault. And those geopolitics can only be solved by us, actually, not the politicians. We're actually the cultural brokers, and we are the brokers and the bridge builders in businesses through tech, through information access, and through the desire to actually collectively build something better than what we have right now. I want to leave something better behind. It doesn't have to have my name on it. I have no ego where that's concerned. But I want that my children and grandchildren are able to look back on the things that we did, that we built something bigger and better, and that we worked across political lines despite the vacuum of leadership that we may have in any particular country, or greatness in leadership at this point in time. Having been in politics, you're handcuffed by parties, you're handcuffed by ideologies, you're handcuffed by a lot of different things. So those of us who have the privilege of being in corporate, we can build these pipelines now. It's really up to us. And as voters and as people that would live in Western democracies where we have the privilege to vote, we need to vote for people who understand that we are the mechanism. We are the trust builders. We are the bridge builders. And so I wish all of you the very best of luck with your own cultural diplomacy as you build diplomatic bridges across all of our countries. I just feel like I have family all over the world. So I feel very blessed. And that's always my underlying mechanism with every opportunity that comes.
Yeah. Anyone else want to offer a different point of view, or? No, Malachi was just trying to celebrate the point that Leela made.
Okay. Thank you very much. Thank you, everybody. That question basically came from Vishnu Ipli, and I hope, Vishnu, out there in the audience, you got a little bit of response on that. And the response is a combination of hope as well as an action-oriented advice for each one of us. Thank you, Honorable Leela, for that. Thank you to the entire panel. Each one of you have brought in your expertise, your insights, attacking the concept of the emerging markets. Yesterday, we were discussing about women entrepreneurs, and it came up that why do we still have to talk about the women entrepreneurs? It should be just entrepreneurs. And I think that's what we should be looking at. We call it the whole world one single global village. I think soon the divide between the emerging and the emerged and the developing and the developed should be, and technology is a great equalizer in doing that. So I'm sure soon we will be talking about the markets development rather than developing markets. Thank you to all. It has been a great conversation that we have listened to. The audience has been listening to. Audiences can actually rate the just they were rating all the pitches. They can actually rate the session into the Vertrio platform. And this brings us to the close of day 2. Tomorrow we will meet again. Our day 3 is a continuation of our capital conclave. Today was the first day. Today was day 2 of the whole event, but just the first day of our capital conclave, where we focused on AI, deep tech, and cybersecurity. Tomorrow we are going to touch upon traditional businesses, the real estate, media, businesses we have all grown up looking at, right? And just like we close the day today with emerging markets, tomorrow we will be doing a panel on developed markets. So that's for tomorrow. Thank you very much. Thank you, everybody. It has been great having all of you here. Judges, the ones who made the pitches, all the panelists on Zoom, as well as the entire large audience out there on Wordrio. Thank you very much. We'll see you tomorrow.
Thank you.
Bye.
Thank you very much.
Thank you. Bye.
Thank you so much.
Bye-bye. Thank you. Thank you.